Hello again, everyone. Jeff Dorman, Chief Investment Officer at ARCA, back again for another edition of That's Our Two Satoshis Live, where we discuss everything going on in the digital asset market. Before we start, as always, this is not intended to be investment advice. For those who've been listening to us for a while, certainly nailed the call of the last couple of weeks here. We've had back-to-back double-digit returns now in the market. A couple of weeks ago, we talked about how this was shaping up to look very similar to July of 2021, just in terms of the parallels of how the market reacted, right? The first 4 months of 2021, you had really sector-specific moves. January was really all about DeFi of 2021. February was more gaming related. March was more Web3 related. And then in April, you had meme coins and some legacy tokens kind of taking off, which ultimately led to an overheated market, a big sell-off in May and June, and the start of July being a huge sell-off that ultimately reversed so much that July actually ended up very positive on the month. Very similar things happening here in 2024 in terms of the run-up we saw in the first 3 months of the year, ending in this run with meme coins and having a really negative May and June. And ultimately, the beginning of July, the sell-off that we saw over 4th of July just made no sense to us, given what we saw on the horizon with regard to the changes in the U.S. regulatory stance, potentially changes to the parties here with the Republicans taking over and ultimately the presidency, as well as the ETH ETF. So pretty dead right there in terms of the way the price action played out. Of course, 2021 had very little to do with presidential elections. The parallel to the presidential elections may be something similar to what we saw in 2020, where, again, you had a pretty strong couple of months heading into the elections, and then right immediately before the elections, you saw a really steep sell-off in the crypto markets. And then once the election actually happened and there was no contentiousness with regard to who was actually in office, you saw a huge rally in both the equity markets and the crypto markets in November and December. So yet to see what that will look like. Maybe we'll see something similar here. Maybe we'll see a little strength heading into the next couple of months here, and then ultimately some weakness into September, October, and then maybe a back half of the year or back end of the year, November, December, some strength once we do in fact have a new U.S. president. But look, with Biden officially dropping out of the race now and endorsing Kamala Harris, the question really is, what does that mean for markets if no longer having Biden in the picture? And you can certainly look at what's happening on Polymarket. I think that's one of the crypto apps that have benefited the most from what's happening now in politics. Certainly, they've had their fair share of wins with regard to volumes and exposure as a result of this. But if you look at the Polymarket, just for the Democratic nominee alone, Harris is now around 82% as of this morning. So pretty strong odds that it's going to be her representing the Democratic Party. The crypto reaction to that on Sunday night was pretty muted when Biden did officially exit the race. Maybe a little sell-off, 1% to 2% here, but certainly nothing that was a real indication that the market was going to be swayed one way or another by whoever the new Democratic nominee is. I think Republicans and therefore Trump are still very heavily favorites to win the presidency. And as a result, that's been very positively viewed by crypto markets. I would say even the nomination of J.D. Vance probably more significant to the crypto industry, given that he comes from a tech background. But also, I guess that's where Harris comes in as well. Harris, being from Silicon Valley, certainly has her tech ties as well. Where I come out on this is, even if the Democrats ultimately do win in November, really the crypto markets care mostly about the fact that it just won't be Biden. At this point, whether true or not, the market views Biden and by extension Warren and Gensler as being very anti-crypto. And no matter who you have as the president come November, or as the president-elect come November and ultimately into January when elected, I think it's going to be a better situation than what we've had in the past. And that's how the market is treating this. It's very clear to me at this point that the current administration just has completely miscalculated how much of a voting issue crypto has become, given that there's somewhere estimated between 50 and 90 million Americans who own crypto. They just alienated a huge swath of American population. And I think, again, Kamala Harris probably hears that. She knows that there's plenty of Democrats within the U.S. Congress who understand that there's no way that with this new breath that the Democrats have, that they're going to be as crypto hostile as the Biden administration has been. So my guess is that's why the market is seeing through this. You go back to where we were 2 weeks ago at the recent lows versus where we are now, up 20% or more in some cases. It's pretty clear that the market is keying in now on the Ethereum ETF, the fact that rate cuts are probably coming as early as September, if not November, and the fact that Biden is out. And again, it doesn't necessarily matter who it is. So from my standpoint, regardless of who the president is, it's pretty clear that crypto's already won, in the sense that no matter what happens this fall, crypto is on the map in a positive way in the U.S. government. They're aware of it. They understand how important it is. And you're going to see a lot of talking about crypto over the course of the next 4 to 5 months, starting with, of course, this week at Bitcoin Nashville, where Trump himself is speaking on Saturday. There has been some rumors that he'll even mention that Bitcoin might be part of the strategic reserve. I don't know if we'll get that or not. I think if we do, it's probably an upside surprise. But again, regardless, just the fact that we have a former president and possibly future president speaking about crypto at a conference this weekend shows how far we've come. I mentioned the Ethereum ETF. I think today, having been the launch, by all accounts, this has been a pretty positive day. I think most estimates for how much the new Ethereum ETF would trade relative to Bitcoin was somewhere in the 10 to 20%. There was $1 billion in trading volume for ETH ETFs today, which blows the door. Actually, it's about 1.3 billion as I'm speaking right now. And that blows the door off of anything that we've seen outside of crypto in terms of new ETF launches. So I know it'll be compared to the Bitcoin ETF launch. But again, if you look at, I think I mentioned this last week, if you look at what IBIT does on a typical day, about 121 million, IBIT being BlackRock's Bitcoin trust or Bitcoin ETF, I think that he did somewhere around 100 million per day. There's 76% of all ETFs that were launched in 2023 still don't have 100 million in assets. So just to give you an idea of just whether we compare Ethereum to Bitcoin or not from an ETF standpoint, if you compare both of them to everything else in the market, all these other ETFs that have come out, these are just mind-blowing numbers that these ETFs are putting out in terms of volumes. And ultimately, that's what matters with ETFs is volume. Volumes begets more volumes. Volume begets more advisors talking about it. So pretty successful day here on the launch. You saw Ethereum basically unchanged on the day. But my guess is if you still see these kind of flows over the next couple of weeks, again, just the pure demand relative to the lack of supply in Ethereum ultimately sends this pretty higher. And unlike Bitcoin, when Ethereum goes higher, it really does trickle down into other areas of the crypto economy because it touches so many things from stable coins to DeFi collateral to NFTs, et cetera. So expect to hear more about that over the coming weeks. Lastly, and I think this one I would encourage people to go to the blog itself. Obviously, That's Our Two Satoshis. The name of this comes from the fact that we write a blog every week called That's Our Two Satoshis, which you can find on our website at ar.ca/blog. We put a couple of notes in there from Michał Benechinsky, who's one of our research analysts focused more on private investments on the venture side. He attended EthCC in Brussels earlier this month and came away with some pretty interesting takeaways that we put in the blog this week. Probably the most relevant from my standpoint was that it's doubled in size. About 6,000 confirmed attendees with 500 side events. I mean, that's twice as much as anything that we've seen in previous Ethereum events. It was definitely less developer focused. I think ETH Denver was much more developer focused. This seemed to be much more investor focused. And I think, in terms of themes that were presented, the ones that we discussed here at ARCA post the event that we thought were interesting is, decentralized AI was still a huge theme. Anywhere you went at the conference, whether it was developers, investors, regular attendees, very heavy skew towards decentralized computing. But also a lot of focus on DePIN, very, very much a topic amongst investors, as well as stablecoins. And stablecoins being back to all-time high AUM now, I think 160 billion, especially considering that last time we were at this number, it included Terra Luna's stablecoin UST. the fact that stablecoins just keep growing, in size despite all of the government regulatory issues, there's just no way around thinking about how stablecoins impact the future of crypto, even though it's very hard as an investor to directly invest in that growth. But I thought, equally notable with regard to the conference, not just the things that we did see there, but maybe topics that were not present there. There really wasn't a lot of talk about the political frontier. There really was very little topics about zero knowledge and ZK. Maybe just because of the disappointing investor returns over the last couple of years, or how it's, maybe a cautionary tale of when you get too ramped up about a certain topic that maybe doesn't come to fruition as fast as people wanted. But just very different when you go to these conferences year to year. You really kind of see where the focus is in the crypto community, and it really does sort of shape the investment landscape for the years to come. So again, I encourage people to read the blog. We have a little more detail in there that you can read for yourself. But pretty encouraged by the price action the last couple of weeks. Again, not totally surprised given what we said a couple of weeks ago, but certainly an upside surprise with regard to the volumes we've seen on day one from the Ethereum ETF. So we'll see what happens over the next couple of weeks of the slow summer, and we'll be back again next week. Thanks for listening to everyone. Take care.